Hello and welcome to this video in which I'm going to explain how the balance sheet works, and this video is suited for buying and working, free HAVO VWO, bilingual pupils. This subject is dealt with in chapter 5 of the book Buying and Working, and as I said, it deals with the so-called balance sheet. The balance sheet is an overview of a company which states on one hand, on one side, what all the belongings, the assets are of a company, and on the other side, how these assets are financed, the liabilities, the so-called liabilities. When I deal with this in school, I always tell the children to drop a big T. So that's what we're going to do first. We draw a big T. This represents the company, and on the left hand side, what we call the debit side, are all the assets, the belongings of this company. So when I do this at school, I ask my pupils, can you name an example of an asset? And normally it goes right. People start telling me buildings, cars, stock, which you sell, and so on. And every once in a while, there is this pupil who says, your employees. Well, thank God that slavery was abolished, so you can't own people anymore. So you can't own employees as well. So they can't be on your balance sheet because only things that you own are on the balance sheet. Yes? So the balance sheet on the left hand side, the debit side, represents all the assets. It represents all the assets in a certain moment in time. Because as well as my wallet, the content of my wallet can change. So sometimes I have 100 euros in my wallet, sometimes I only have 2 euros in my wallet. So it depends on what time I'm going to draw up this balance sheet, what I own and what I don't own. Yes, so it can change. That's why we always put a date above the balance sheet. So in this case, maybe the 1st of January 2021. Yes? So we're going to have a look at the debit side. And on the debit side are all the so-called assets. The first category of assets are called fixed assets. Fixed assets are all the assets which are supposed to be in your company for more than 1 year. Yes? So, for example, more than 1 year. So, for example, buildings. Suppose this company has buildings that are worth 500,000 euros. Another example of fixed assets are the furniture in your company, for example. Those are called inventory. And suppose that the inventory is worth 100,000 euros. So you have 100,000 euros worth of furniture. Suppose you also have a car which is used for delivering stuff, so it's longer than a year, it's supposed to be longer than a year in your company. So a car, for example, it's a decent one, 50,000 euros. You see how easy you make the mistake of a comma instead of a dot. Yes, so 3 examples of so-called fixed assets, your belonging that are supposed to be in your company for more than a year. Well, you also have belongings which are supposed to be in your company for less than a year. So for example, the things that you sell, we call those current assets. And your current assets are your belongings that are supposed to be in your company for less than a year. So, for example, the stock, the things that you sell. By the way, this is our school bell, so now you know. So, stock. The Dutch word for stock is voorraad. So, suppose you have 100,000 euros worth stock. Then there's another item, and that item, so for example, if I sell things, if I have my company and I sell things, and what I sell isn't paid straight away, so I sell things to another company or to customers, and they don't pay me straight away. That means that they owe me money. That money is actually mine, but it hasn't found its way to my wallet yet. Yes? So if I sell things which aren't paid yet, I call that debtors. So debtors are people or company that I sell things to which haven't been paid yet, so they have to pay me. €50,000. Now, the last category isn't really a category because they belong to the current assets, but I'm going to mention them separately anyway, and they're called the so-called liquid assets. Liquid assets are the things that you pay with. So, all the money in the bank, for example. So you can pay with money in the bank. So suppose I have 40,000 euros in the bank, which is not really strange for a company to have that much money in the bank. So I can pay with the bank. So officially, liquid assets aren't a separate category because they belong to the current assets, but I'm going to name them anyway because they have a special, they are very special. And cash. So that is the cash money you have in the till in your company. So coins and banknotes. For example, 10,000 euros. Well, I'll leave it with that, and then I'm going to add up the value of all the assets. So what you have to do is on the left-hand side, of the debit side here, you write down what it is, and then here you write down the value. Yes, the value at this moment in time, because this can change. Because if I sell things, the stock will go down, obviously. Yes, and if I buy stock, the stock will go up, but that's a different date, moment in time. Yes, so I'm going to add this up. 5, 6, 650, 750, 8, 850. So the total worth of these assets is 850,000 euros. Then I'm going to the right hand side, and we call this the credit side. And on the right hand side, left hand side, sorry, it says what we have. And here I'm going to write down how this was financed. So I'm going to write down how this is financed. Okay, so first we have the so-called owner's equity. And the owner's equity is the money that the owner of this company put into his company. Yes, so the owner of this company put money into this company. Suppose he was rich and he had 200,000 euros, which he put into his company in either money, or maybe he donated his car to the company, so he gave assets. So you can either give money to finance your asset, or you can give the asset yourself. Yes, so this is how it's financed. So maybe he put in 150,000 euros, yes, and 50,000 euros worth of a car, yes, but we don't know. We just see that out of this 850, 200 is financed by the owner of this company, yes. So that's only 200,000. So that leaves us 650,000 euros, which have to be financed from somebody else. Yes, by somebody else. Okay, so we call this liability. So if someone else besides the owner puts money into our company, yes, finances our assets, we call that liabilities. And we start with the so-called long-term liabilities. Liabilities. These are loans that you have to pay back, but you can take more than a year to pay them back. An example might be a so-called mortgage loan. And a mortgage loan is a special kind of loan which you can use to finance buildings, for example. So suppose this building is fully financed by the mortgage loan. So the bank gave me 500,000 euros to buy this building or these buildings. Then we have other loans, maybe. And these other loans, suppose they are worth 100,000 euros. Yes, so suppose that someone other than the bank, or the bank gave me another kind of loan, which is 100,000 euros, and I can pay it back within 5 years, for example. Yes, then it's a long-term liability. Yes? Okay, so if I get long-term liabilities, I can also have so-called short-term liabilities. And these I have to pay back within the year. So I have to pay them back within the year. I told you about the debtors. Those are companies or people to which I sell things, but they didn't pay yet. It can work the other way around as well. Suppose I bought stock, 50,000 euros worth of stock, and I haven't paid the bill yet. So 50,000 euros that I have is actually for the people that I bought the stock from. Yes? Those are called creditors. And creditors are people or company from which I bought things, from whom I bought things, yes, and I haven't paid them yet, so I have a debt. So suppose this is 50,000 euros. There are other short-term liabilities as well. For example, rent that has to be paid, if I have to pay the tax authorities some money, yes. So all the money that I owe people or companies, which I have to pay within the year, are mentioned here within the short-term liabilities. Well, for the example, there are no more short-term liabilities, so I'll leave it with that. Now I'm going to add these up as well. 7 8,815. And now we see something special. Because it's no coincidence that these are the same. And that's why a balance sheet is called a balance sheet, because it's in balance. This equals that. And now, why is that? Because everything that a company owns is here. So all the assets are here. And here I mention how these assets are financed, how they are paid for, with whose money. So it's only logical that these two are the same. So everything that I have is here, and here I mention how it was paid for. Yes? So, in short, we have a balance sheet, an overview of all the assets, the belongings of a company. On the left-hand side, the debit side. On the right-hand side, the credit side, it is mentioned how these were financed. And it's always in a certain moment in time. So, and these are always equal. So hopefully you enjoyed and learned from this video. And I hope to see you next time. Cheers.